Bitcoin has once again captured the world's imagination, evolving from a niche digital curiosity into a significant asset class on the global stage. As we stand here on September 1st, 2025, the conversations surrounding it are more nuanced and critical than ever before. It is no longer a question of if Bitcoin will survive, but rather how it will integrate into our existing financial frameworks and what role it will play in the future of money. This year has been pivotal, marked by significant price movements, regulatory clarifications, and a deeper understanding of its long-term value proposition. For anyone involved in finance, technology, or simply curious about the future, ignoring Bitcoin is no longer an option. The digital asset continues to challenge our assumptions about currency, ownership, and trust in a decentralized world. This essay will serve as your comprehensive guide to the state of Bitcoin today. Before we dive into the details, I want to extend a special invitation. The world of digital assets moves incredibly fast, and staying informed is your greatest advantage. As a thank you for joining our community, you will receive a complimentary copy of our exclusive ebook, the 2025 Crypto Security Checklist, a must-have resource for safely navigating the digital asset space. The journey we are about to embark on is one of discovery and critical thinking. This is your essential briefing on the original cryptocurrency's most important year yet. As of early September 2025, Bitcoin's price has been a focal point of intense discussion. Investors and analysts are watching closely. Today, the asset trades around $140,000, a significant milestone and sign of renewed bullish momentum. Bitcoin price trend, January 2025 to September 2025, highlighting climb to $140,000. This follows volatility in the first half of the year. Price consolidated after explosive gains in late 2024. The path hasn't been straight sharp rallies, corrective pullbacks. Testing even experienced market participants. This level reflects multiple factors: macroeconomic trends, maturing market infrastructure, sustained investor demand, primary driver, demand from institutional spot Bitcoin ETFs approved in the US and other jurisdictions. These regulated products opened a secure entry point for new capital wealth managers, pension funds. Steady ETF inflows created persistent buying pressure, absorbing selling from short-term traders and miners. This structural shift differs from past retail-driven bull cycles. Institutional-grade products added legitimacy and stability, lowering career risk for professional money managers. The Bitcoin halving of April 2024 continues to cast a long shadow, and its effects are growing more pronounced in 2025. This pre-programmed event cut miner rewards from 6.25 BTC to 3.125 BTC per block, fundamentally altering supply and demand. Approximately 450 new Bitcoins enter circulation each day, down from 900 pre-halving, making scarcity more acute. Supply dropped, demand from spot ETFs surged, creating a powerful tailwind for price. The supply shock analysts warned about is playing out now. Fewer new coins meet many more buyers. For Bitcoin miners, the halving brought intense challenge and adaptation. A 50% revenue cut forced a sector-wide reckoning, pushing firms to become hyper-efficient. We've seen consolidation, big, well-capitalized players buying smaller, inefficient operations. Focus shifted to low-cost, energy-optimizing hardware transaction processing and network security. Post-halving innovation accelerated. The network is now more robust and poised for the next growth phase. As Bitcoin hovers around the $140,000 level, expert predictions for the remainder of 2025 are coalescing around several key themes. Though exact price targets vary, many analysts are strongly bullish, forecasting a cycle peak around $180,000, $250,000 by early 2026. This is largely based on historical cycle analysis. Bitcoin's price tends to go parabolic 12 to 18 months after a halving event. Institutional ETF demand may still be unfolding. Sovereign wealth funds are still conducting due diligence. Major corporate treasuries are doing the same. This bullish case is supported by on-chain metrics. Analysts are watching flows to exchanges, and flows from exchanges. A trend of coins moving off exchanges into private long-term storage wallets signals accumulation. Metrics like the Spent Output Profit Ratio, or SOPR, are being monitored. SOPR suggests investors are selling for a profit, but they're not showing the euphoria typical of a market top. These data-driven indicators suggest the cycle may still have room to run. Cautious or bearish analysts urge prudence. They point to significant macroeconomic uncertainties. A sudden reversal toward central bank tightening could derail the rally, or an unexpected resurgence in inflation. That could dampen appetite for risk assets like Bitcoin. They also warn of potential regulatory headwinds as market cap grows. Instead of 80% bear market crashes, we might see 30 to 40% drawdowns. As Bitcoin integrates into the global financial system, price action may become less speculative. The year 2025 has really been a landmark period for cryptocurrency regulation globally, with governments shifting from a phase of just observing to one of, active policy implementation. In the United States, probably the most significant development has been the continued clarification from regulatory bodies like the Securities and Exchange Commission and the Commodity Futures Trading Commission. After the successful launch of spot Bitcoin ETFs, the regulatory framework has focused on investor protection, market integrity, anti-money laundering protocols for the exchanges and custodians that, form the backbone of the industry. This has created a clearer, though more stringent operating environment, which has actually been largely welcomed by institutional players who, honestly, crave regulatory certainty before committing significant capital. Internationally, the regulatory landscape still remains a patchwork of different approaches, but we are starting to see a trend towards harmonization. The European Union's markets and crypto assets regulation, which entered its full implementation phase this year, has set a comprehensive standard for the continent. MyCA provides a single licensing regime for crypto asset service providers to operate across all EU member states, bringing legal clarity for exchanges, wallet providers, and stablecoin issuers. This framework is now being looked at by other nations as sort of a potential blueprint. Similarly, major financial hubs in Asia, like Hong Kong and Singapore, have refined their own regulatory sandboxes and licensing requirements, aiming to attract crypto businesses while mitigating risks and creating a competitive dynamic for attracting digital asset innovation. However, not all regulatory news has been positive. Some nations have taken a more restrictive stance, citing concerns over capital flight, financial stability, and the potential for illicit activities. Ultimately, the overarching theme in 2025 is one of maturation. The narrative of institutional adoption has, honestly, moved from a forward-looking prediction to a present-day reality in 2025. The initial wave of investment, driven by the launch of spot Bitcoin ETFs in 2024, has broadened into more sophisticated, integrated strategies. We're seeing a shift from simple passive exposure to active management. Major investment banks, asset management firms are offering Bitcoin products to clients and incorporating it into model portfolios and treasury management strategies. This is a profound vote of confidence in Bitcoin's staying power as a legitimate part of a diversified portfolio. Quiet accumulation is happening with corporate treasuries and sovereign wealth funds. More publicly traded companies are allocating a small percentage of cash reserves to Bitcoin as a hedge against inflation and as a potential source of alpha. These moves are now viewed as prudent treasury management in an uncertain climate. Allocations remain modest, but they're symbolically important and creating a corporate playbook, potentially unlocking massive new capital. Institutional infrastructure has reached new sophistication. Custody solutions, once a major barrier, are now robust and highly secure, offered by established financial giants. The derivatives market has deepened, with increased liquidity in futures contracts and options contracts, giving firms tools to hedge exposure and execute complex strategies. A full-fledged financial ecosystem provides the risk management prerequisites for conservative institutions like pension funds and insurance companies. Wall Street boardrooms are no longer asking whether to invest in Bitcoin, but how to do so responsibly and effectively. While price and investment have dominated headlines, 2025 has also been a year of significant progress for Bitcoin's utility beyond its role as a store of value. The Lightning Network, a Layer 2 scaling solution built on Bitcoin, has seen exponential growth in capacity, has seen exponential growth in user adoption. This technology enables near-instantaneous and virtually free transactions, making it viable for everyday payments and even micropayments. We're seeing a growing ecosystem of applications and services built on Lightning social media platforms that allow users to tip content creators with tiny amounts of Bitcoin, gaming apps that reward players in real time. This expansion is quietly proving that Bitcoin can function as a true medium of exchange. In several emerging markets, Bitcoin and the Lightning Network are providing tangible solutions to real-world problems. In countries with high inflation and unstable local currencies, citizens are turning to Bitcoin as a more reliable way to save and transact. It offers a lifeline for individuals and small businesses to preserve their purchasing power and participate in the global economy. Remittances are another powerful use case. Sending money across borders using Bitcoin is often significantly faster and cheaper than relying on traditional remittance services which can charge exorbitant fees. This grassroots adoption, driven by necessity rather than speculation, is a powerful indicator of Bitcoin's fundamental value proposition. The concept of building more complex applications on the Bitcoin blockchain has also gained significant traction. Innovations like ordinals and other protocol developments have unlocked the ability to inscribe data, create non-fungible tokens, and even launch new fungible tokens directly on the Bitcoin network. While this has sparked intense debate within the community about the primary purpose of the blockchain, it has undeniably unleashed a wave of creativity and development. This Bitcoin renaissance is attracting a new generation of builders who are exploring possibilities that were previously thought to be exclusive to other smart contract platforms, expanding the design space of what can be achieved on the world's most secure and decentralized blockchain. These advancements in utility are crucial for Bitcoin's long-term success. While its function as digital gold is a powerful narrative, its ultimate potential lies in becoming a multifaceted platform for a new, decentralized financial system. In summary, 2025 has really proven to be a year of profound maturation for Bitcoin. We've witnessed its price reach new heights. If you are committed to staying ahead in this rapidly evolving space, I once again invite you to subscribe to our newsletter. Therefore, our next essay will explore a topic of growing importance: the rise of real-world asset tokenization.